Well, welcome again, everybody. This webinar is brought to you by the Cooperative Development Center program, which is part of the Ohio Employee Ownership Center at Kent State University in Kent, Ohio. We're a nonprofit training and outreach organization at the Kent State University campus, and we focus on job retention and business by helping small business owners learn more about the importance of succession planning and cooperative development in general. Today we have Roy Messing of the Ohio Employee Ownership Center, program coordinator and deeply involved in the Co-op Development Center activities and the succession planning program. Roy, take it away.
Okay. Let's go ahead. A little different for this session since nobody said they didn't want their name announced. I'll just announce first names, and if you'll announce who you are, what you hope to gain today, and then we'll move from there. So the first person being the chairperson is Jay, who's already introduced himself, and then myself, Roy Messing, here at the Cooperative Development Center at Kent State University. And if Andy would chime in.
Hi, I'm Andy Shively. I work with Third Coast Workers for Cooperation in Austin, Texas, and I'm just always interested in seeing how it is that different folks lay out the process for starting a worker cooperative, so I just wanted to see how y'all lay it out.
Great. Ashley.
Hi, I'm Ashley Hernandez, also with the Cooperative Development Center with Roy and Jay. And although I work at the center, Jay and Roy have a lot of knowledge, especially in regards to cooperatives and financing. So I'm hoping to learn something new on that end of things.
We won't let Ashley out. She has to come to sessions like this to get this information. So. Diane.
Hi, I'm Diane Gassaway with the Northwest Cooperative Development Center. We're Roy's colleagues out in the Northwest, and we've done a few worker co-ops, but there's always room to learn more, and each project is individual, so the more we learn from others' experience, the better off we all are.
Great. Jessie.
Hi, my name is Jessie. I've been at Equal Exchange out in Massachusetts for about 15 years, and I'm currently doing the Dawn peer advisory training, which is about helping worker co-ops, either existing or startup, and also working on some hopefully new business development within our worker co-op here at Equal Exchange.
Okay, thank you. Kim.
Hi, I'm Kim Kuntz. I'm with the California Center for Cooperative Development, and basically, similar to other people, I just want to enrich my knowledge of different development approaches.
Okay. Peggy?
Hello, this is Peggy Fogarty-Harnish from Penn State Extension, and I also am on the board of Keystone Development Center, do some work with cooperatives, but I have not yet been involved with employee ownership, so I'm starting off new on that idea. Thanks.
Okay. And Thomas.
Hi, I'm Thomas Beckett. I'm in Asheville, North Carolina. I'm an attorney working in social enterprise and small business law, cooperative law, and I am working with some folks to start a cooperative development center here in the Southern Appalachian region, Ownership Appalachia, and we are hoping to spread the cooperative paradigm throughout the South.
Okay, thank you. Well, moving forward, I think a lot of you are all around this topic. Why establish a worker co-op? Can be an economic need or desire that is unmet, and this can come from several areas. The case here in Northeast Ohio, you're probably all familiar with the Evergreen Cooperative project. And that need there is really based in the community need for jobs and stability. And the worker co-op model was a model that was pursued really to help develop the community, stabilize the community, create jobs, anchor jobs, and wealth within the community. Smaller projects than that was a sizable project. Could be something as something like Arizmendi, where they have groups come together to form bakeries. So there's a wide range of economic needs that just are not met out there, And so individuals can come together and meet those needs. The second part of that is, even though there may be a great idea, the group that forms has to have the capability to meet the market need, whatever that market may be. The groups, when they do come together, they find ultimately they can accomplish more as a collective group rather than individually. And then probably one thing that goes against at least the thought of cooperative, the business has to operate profitably. And remember, that means that it's going to operate profitably for its members. The members will get the benefit of that. If the business itself, the underlying business isn't going to be profitable, then it's not going to be sustainable over the long term. So you have to have underlying business, co-op or not, that can sustain itself over the long term. Let's look at the process, and as we go through this, I'd be interested, since a lot of folks have done this, see what their take is as well. We can make this pretty interactive with a small group. Really, the first part of this is you have to determine if the cooperative is the appropriate model. We as cooperative developers, talk to a lot of people, and a lot of those projects fall by the wayside for one reason or another. Many businesses are formed from our work, but sometimes the cooperative model itself isn't the appropriate model. So we want to look at that and see what dynamics would drive the cooperative. If you have a wide group of people who have the same type of needs, but if you have one or two of those individuals who dominate that, maybe the cooperative model isn't the correct model because those two individuals will get too much of a representation and the rest will not benefit as much. So we want to make sure that we go through the process and determine, yes, there's an underlying business piece that makes sense, but as well, it makes sense for all groups to cooperate. There was a group that we met with, or we've had some interactions with recently, and there were two individuals who really saw the benefit of coming together, but they really had the lion's share of the business, and the group didn't come together to form a cooperative because these two didn't want to cooperate. They really wanted to go ahead and do it on their own. So in that case, if they did form a cooperative, it probably wouldn't succeed long term because there would be that conflict. So we want to make sure that there's continuity there. We'll review the organizational steps as we go through the process in some fashion. And as we go through this, just to keep in mind that it's not do one and then step two comes next. There's a lot of intermingling of this as you go forward. But we'll look at the developing leadership and membership, working on a feasibility study, then moving to the marketing or the business plan itself, then actually getting capitalization in place, working on that plan, and reviewing legal consideration. And once we're through that process, obviously we'll go more into the startup process itself, where we're going to launch the cooperative. That would include getting a charter member meeting, implementing the business plan, having a membership drive, and acquiring the capital, and then selecting the management and acquiring the facilities. So we're gonna go in more detail here now on these past two slides. I guess I had another slide. But again, with the appropriate business model, making sure that they have the needs and values and the goals are common to all. They won't be a perfect fit, but they should have a lot of commonality. You want to make sure that you balance those interests amongst all. And you have an agreement on a general approach. You want to make sure as you're moving through the process you don't have pockets, if you will, or individuals aren't signing off as you move forward. Otherwise, you won't have a good cooperation or cooperative at the back end if they can't cooperate during the process. You are going to want to seek financial commitment, and then you're going to want to get the goals of all is really to get a commitment to those goals from a cooperative venture. And as in any cooperative, everybody's going to have to give a little bit. They're going to have to subordinate some of their interests, some of their desires, if you will, so that everybody can benefit, but they can't control the process individually. Okay, let's look at those organizing steps. The first would be really to focus on developing the leadership and membership, and this is in the early formation process. You want to make sure that you select the committee. These are people who have a real desire to serve in that. They're very interested in seeing the cooperative, the business being successful on the long term. So they would actually contribute a lot of time and effort to make this happen. Usually from that formation committee, the leadership is determined and identified. And basically they're the folks who will gain the knowledge necessary within that industry, within that cooperative, to make it successful, to have a successful launch and long-term program. The other thing that we feel is critical is making sure you get the outside advisors that are necessary to make it successful. We really approach things from OEOC standpoint or our Cooperative Development Center standpoint that one individual doesn't have all the answers. They just can't have all the answers, and you want to make sure that you get the right people lined up to guarantee a success. Some of those advisors are going to include a cooperative attorney. As we all know, cooperative law it varies from state to state, and you want to make sure that you have somebody that understands cooperatives first from a legal aspect, but then as well understands from your individual state where you're doing the project, how cooperative law works within that state. Another area you'll look for from the outside advisors, professionals would be accountants who understand cooperative laws, and as well, if you have an underlying business that's a specialty, you want to make sure that your accountant can gain that knowledge as well. And you may look for advisors within that industry. If it's a specific industry, in the example of the Evergreen Cooperative Laundry, it made sense to have somebody with laundry experience, commercial laundry experience, to really vent a lot of those ideas and really raise the issues and address those issues, so that they brought that knowledge, that breadth of experience to make sure the right the right assumptions were made, so you could work on those assumptions moving forward. Then once you get that group together, they can really start formalizing what the project will be. The project being the cooperative itself, and then you're going to hold exploratory meeting. That's where you're going to take the next step and start reaching out to the next level of individuals who could be interested in the cooperative and try to attract their commitment, or at least their interest first, and then their commitment to the project on a long-term basis. We would complete a member survey. Really what you want to do is, once you have an outline of the type of product or service that the cooperative would be generating, and you have the employees coming in who are going to this, you want to see, okay, who's going to use this cooperative, and are they going to be viable long-term members within the cooperative, and is it actually going to create some viability? The next phase, once you have a sense of, okay, you've got commitment from the individuals who will participate in the cooperative, really you want to look at taking a view from the outside and developing a plan, researching the market that the cooperative will serve, and develop a plan around that market, which really will speak to the viability of the business long term. Some of those things that would include really the review the marketplace. You're looking at both the what you're going to sell, what you're going to buy, the inputs, and review those sources and find out what the viability of that is. Conducting a feasibility study. This is something we work with a lot of groups on in our work with transitioning businesses. Really, the feasibility study and then the business plan. The feasibility study is it's not a cursory level review, but it is a fairly detailed level review of, okay, we have this idea, we have this market that we want to serve. Let's go and really, start putting numbers together, putting our plan together, and formulating a basic understanding of, can this project move forward successfully? And once you complete that feasibility study, it's going to give you some idea of financially if it's viable. Is the market going to support this type of project? And once you get to the sense of, okay, it looks like there's viability, that's when you go to the next stage of a business plan. The business plan will take all the information that you've learned in the feasibility study and then start applying that to the individual situation of the business, of the cooperative itself. And so you're going to take all those and you're going to start formulating, given these circumstances, here's how we're going to form the worker cooperative and move forward. A lot of the process as you're going through from organizational status, you're going to want to look at capitalization. From a capitalization standpoint, things you're going to want to consider are, do you want to do it on a stock model or a non-stock model? If you're going with a stock, obviously there would be common stock for the individuals who are members of the cooperative. We see more from a preferred stock standpoint of people who are interested in supporting the project, but they aren't involved day to day, so this helps raise capital. We can get in a long discussion about that, but that's more of, from a preferred stock, it is another tool to raise capital. They still have a voice in it, but they don't have the ongoing voice of common stockholders, and this is typical in any corporation. The other side is not to have stock, but to have membership or capital certificates, very similar in that nature, that you're going to have a membership share or certificate, and the capital, again, is in line with that preferred stock piece. Next thing you're going to have to really look at is projecting the capital needs. Now they have an understanding of what the project's going to look like. To fund this project, to make this project happen, what will the underlying capital needs be? What sources of funding or what funds will you need to make it happen? Whether you're going to have to acquire equipment, whether you're going to have to acquire real estate and facilities, what sort of working capital will you need to have? You're going to have to address that as you would in a business plan. So part of that's going to be outlined in your business plan. You will have further detail as you go through, tying in how you're going to capitalize that, how you're going to find sources for that. And once you have an overall understanding of what your capital needs are, then you have to determine what each individual member will be required from an investment standpoint, and that's their skin in the game. What sort of share should they have or cost should they have for their share? Obviously, from a business standpoint, we know folks who have a vested interest, they're going to make sure that they're going to put in the time and effort, more time and effort to make it happen. So it has to be an amount that really binds them to the organization. The second piece of that, with a lot of the things that we're doing, especially like Evergreen, other groups, it doesn't necessarily mean that the individual member is going to have to come up with all those funds at once. Depending on dynamics, with some great capital backing from outside, from a community investment standpoint, Evergreen, the members didn't have to write the check up front. They were able to buy their share via a payroll deduction process where they got paid a little more, but that was taken out each month or each biweekly, and they paid off their note, if you will, to buy their share. So there's some flexibility with that, and obviously that depends on what outside funding you may have to help support that. And that's it's a little different than the traditional angel investors that corporations would have at a startup point. But there are groups out there that are really trying to promote this. So we think there's going to be more opportunity to do this type of thing in the future.
Hey, Roy, to jump in, did you see Diane's question here?
Oh, no, I didn't. There's a question in regards to the rule of thumb for investment starting point. We don't really have one. We try to assess the situation. I guess those factors that we look at, how capital intensive is the project itself. Obviously, something like Evergreen Cooperative is very capital intensive because it is a quandary. There's another project under the Evergreen umbrella, and that's Ohio Cooperative Solar. Piece we deal with does weatherization. So they're buying vehicles, then going out and weatherizing homes, putting insulation in homes within the community. When you're talking a multi-million-dollar investment compared to for each truck that they take out to do these projects, it's under $50,000. So it's a wide variety. We really just have to sit down and look at the dynamic and see what the commitment is of each individual. So we've heard anywhere from a few $100s from a cooperative, a few $100 all the way up to $10,000, and it just depends on the dynamic. But it's the less capital intensive, the lower membership cost there would be typically. Really from a standpoint of a functional difference, there's a question on functional difference between stock and non-stock models. I guess it's more of a preference on how you handle that moving forward. Stock obviously represents something that you're going to get back over a period of time. Membership is more of a cost, so it's a lower cost in general, unless you have a capital certificate. I mean, it's all going to be returned at some point in time. I think it's more of a preference, if you will, of looking at somebody looking at the hurdle of investing stock compared to I'm a member. So I think it's more of a nuance than an attorney is going to tell you it's more than that, but we see it more as a nuance between the two. They do act very similar in that as you segment the different pieces, you're going to have some that are looking for an active role that would be typical of stock, of common stock, and the membership. And preferred stock is going to be more from a capital or more from an investment standpoint. I hope that addresses that. Does that hit that?
Yeah, it sounds like there is no difference, really.
Yeah, I mean, there's a difference, but I think it's more of a mental difference than.
Yeah, it's a psychological issue.
Correct. That's the terminology.
Thank you. Thank you for finally clarifying that. Nobody has been able to for so long.
That's my take on it. I think if you ask an attorney, they're going to tell you something different. But both have cost. Both buying commitment. But I think it is more psychological. Some people just see stock as a big hurdle. Also, throw that back. Pardon?
May the stock option be more appropriate when you have significant outside investors? May that be a factor?
Yeah, if you're doing it from a stock or preferred versus common stock, I guess I'll throw that out to the cooperative developers out there to comment from your standpoint what you've seen in general, because this is a cooperative question. I guess hearing no comment, I guess everybody's probably pretty much in the same thought process. We don't see a huge amount of difference. Okay, moving forward. Legal considerations. As you're organizing, just like any other corporation, any other entity, you have to go through the process of developing the necessary documents to file at the state level, so you are officially organized. Probably the complexity here in a co-op, especially a startup co-op, a startup worker co-op, you have, if you take in the dynamics, if you're going to start a business and you get organized, there's a lot of unknowns, and you're trying to organize around that. And then if you're starting a cooperative and you try to organize a cooperative, you've got a lot more players at the table, so there's more detail that you have to work through. And so when you're looking at the startup of a worker co-op or a start of a co-op in general, you've got a lot of complexities that are coming into play. And so you really have to spend the time, and it doesn't move through the process very quickly, typically, of making sure that all interests are heard, making sure that you have everybody, coming to the table, getting their buy-in, getting their commitment, and then making sure on the flip side that you've got the individuals who are members covered, but as well then look at it from a business standpoint to make sure that it makes sense, what you're doing makes sense to give the business the chance to be viable long term. So let's review through this. Typical articles of incorporation, similar to what you'd have in any business, except you're actually going to incorporate as a co-op. And again, here's where you need to have the attorney who understands what the co-op code is within each state, because there are differences in each state. When you move to bylaws, you're really going to outline how the co-op is going to operate, their day-to-day operations, if you will, how people will be guided through their work through the co-op. One of the groups our center worked with a long time ago is Casa Nueva. They're a restaurant down in Athens, very co-op oriented. They call themselves a co-op. Unfortunately, back 25 years ago in our center, and their group was forming at the same time, Ohio cooperative law did not really allow for that to be formed as a co-op. So what they did to incorporate, they filed their articles of incorporation, and then within their bylaws, they placed all the cooperative language within their bylaws. So they are very much cooperative, but the bylaws really outlined how they would work going forward so that everybody had their voice at the table, if you will. As you're moving forward from there, looking at the membership application, here's where you drill down and go through the details of, how is this going to work from an individual standpoint. You have the bylaws, how is it going to work for everybody. Membership, it's going to, how will that work for each individual? And it's going to be uniform because, they all have to comply with that. But that's going to talk about, how you're going to be addressed from a standpoint of, how your patronage will be determined. All those details will be put within the membership application. How much capital you'll have to contribute, either be it via certificate or a share of stock. The employee agreements are a critical piece. As you're getting buy-in, you want to make sure that the employees are engaged in that, they're committed to the process. So that'll outline how they're going to work within the cooperative and how the cooperative will work for them. And probably the last piece is the one that's probably the most difficult, would be the revolving fund certificates, because if you're doing a startup business of any sort, there's a lot of uncertainty because it's a startup. And then if you're looking at from the workers who are organizing this, you want to say, okay, I'm putting my money in today. When am I going to get that money back over a period of time? So you have to look at the dynamics of how much capital is placed in today, how much income the company will have on an ongoing basis, what sort of long-term needs do they have, and how do you rotate that back to them? So this is a long horizon planning that needs to take place, and quite often at least even in our select machine, which is a transition, it's something that had to be developed over time. You do your best guess up front, but there's probably going to be some modification, and obviously that would have the whole cooperative approval on that over a period of time. There is a question in regards to getting sample of these documents. the membership application, employee agreements, and revolving fund certificates. We had a similar question on our conversion last week. We are not attorneys, but attorneys draft these, and the information is I guess the intellectual knowledge of the attorneys or the clients that have that. We will try to pursue to see if we can get some generic outlines from some of the attorneys. We're actually working on a project, at least if it works out for us, within this this USDA grant, our RCDG grant that's coming out, that we're trying to get some attorneys to put some basic documents, some basic worksheets together, if you will, of if they're going to form a worker co-op. Here's the basic steps. Here's the legal things you need to have. So if we can obtain that, we'd be happy to send those out. But we'll see. We have had requests in the past, and the folks we request from the outside in regards to coming in and sharing those documents. That's unfortunately those aren't ours to share. We can ask, but if we can get those, if we can get some sample documents, we'd be happy to send those out.
Andy is pointing out that there are some online examples.
Yeah, the U.S. Federation of Worker Co-ops has some, but yeah, I haven't delved into that detail. Again, the thing you need to think about is, well, I think in the last three, those aren't so much as far as the articles of incorporation. You just have to have your thought around, what can be done within each state as well. Thank you for that input, Andy. Now moving forward, once you have all this put together, really looking at the launch of the business. And you'll look at taking the charter member meeting. So here's where you're actually stepping out. You're getting that commitment beyond the initial stage. That charter member meeting, you're announcing how the cooperative is going to operate. You're actually getting financial buy-in from the individuals. They're going to be asked to sign the agreements. Then you'll move forward and with your implementation of the business plan, and you're going to have that further the membership drive. So if you have some workers that already commit up front, you may have some that don't, or if you have a multi-stakeholder, you're going to reach out to more as you move on. Part of the process in a launch, this will happen over a period of time where you're going to bring in more people depending on how the cooperative, how the business plan, if it's successful and it grows. So you're going to have this ongoing building of the business. So you just have to keep that in mind. Thomas Beckett indicated he'd be happy to generalize such documents if we could get some samples. So we'll keep that in mind, and we'll try to see if we can get some. And even if we could get some with the the redacted, like from the government, where they block out certain things, that would be great. When we look at moving on, probably one of the toughest things for any business these days, startup or even existing, is acquiring capital. And then again, you add the complexity of a worker co-op on there, where they're trying to get capital from the outside. To the average business lender, it's a different beast. So it is more of a challenge. So one thing we're looking at with some of the funding we're doing through our revolving loan fund is trying to stage that if we can. For instance, if you have working capital needs, and then you have to buy some equipment, and you have to get a facility. Obviously, you want to see if you could look at the real estate itself. If you can carve that out and maybe enter into a lease with an option to buy, you can sort of help secure that facility for you long term. But you don't have to put a lot of capital up front. So there's different ways as you're going through this, and you can obtain this. Obviously, part of that funding will come from initially you're going to have membership, their stake in the business. See if there's other people who, from a preferred standpoint or other, want to invest. What can you do from a traditional lending standpoint to come in and fund? There may be the opportunity to get some outside funders. One challenge we've seen that a common business doesn't have is some of the restrictions from SBA or USDA, some of their loan programs, there's real challenges in getting an SBA guarantee just because it doesn't work well with a cooperative model. They want personal guarantees. That doesn't fit so well. So there's some challenges there, but I think there's opportunity within funds. There's our fund, which loans to cooperatives, employee-owned businesses. There seems to be a lot of steam gaining around the country with different funds that are really looking to invest into this type of either employee-owned or a cooperative venture. So I think we'll see more development of that over time, but those are other sources. And the other sources you may have is like any other business, friends and family. See if they will help fund the operation for a period of time till you can get running, get your legs underneath you, and then get more conventional financing. Management selection is a critical piece. The cooperative group in itself, does actually control the board of directors. It would actually select the board of directors, but management is a different function, and you have to have that function hired out depending on the complexity of the organization. If you don't have that specialty internally, you want it hired out. If you have the specialty internally, then you can select that individual. Quite often we see with worker co-ops is they start with one individual and then they rotate that over a period of time. So really the selection is based on the need that the cooperative has. And one thing we like to do is if you don't have that expertise internally, see if you can get it from the outside on a selective basis. If you don't have the best expertise in an industry, then perhaps you get an advisor who's in that industry will help you out. They don't have to be the person making the decisions. They're helping advise you as to the best way to move forward. So we think relying on advisors makes a lot of sense. My background in the commercial lending, it was very common for business owners to have a group of 3 or 4 advisors, either formally or informally, that they would go to bounce things off of. So again, the underlying worker co-op is a business in itself, and there's nothing wrong with getting the people who have the knowledge, the appropriate knowledge, to educate yourself and really making an informed decision. So we think that's a very worthwhile activity to pursue. And then again, mentioning acquiring facilities, you want to make sure typically with a startup, you're going to have certain facility needs. You want to keep in mind what long-term growth you have and how you may transition if you need. So you may have like a lot of businesses start in the garage and then grow over time. So you really want to have a plan in place as how you're going to develop that over a period of time. And running out and buying a building may or may not be the best use of your capital right now. The other thing where I think there is opportunity, right now the commercial real estate market is pretty hard hit, and I think especially in urban areas, something like Cleveland, I guess there's going to be pockets of this. A lot of those communities would rather see somebody go in and generate some revenue and make use of those facilities because taxes have to be paid, the property has to be maintained. So I think there's a lot of deals to be had with communities that are hard hit if you're starting a business, and frankly, see if you can go push for a better deal within that community, because if the property's sitting vacant, the community is going to want the town, city, township. They're going to want that facility being used so it doesn't deteriorate, especially if somebody's taking that back. So I think there's opportunities to step into those situations out there and grow over a period of time. So once you've gotten to that point, now it's really completing the deal, completing that transaction. One thing that you obviously have to do as a startup You're going to have the financial commitment, be that from banks, other financial groups coming in, and you're going to have to make sure of going through the loan documentation and the covenants. One thing that I'd like to point out here is, he who has the money usually sets the rules. So you want to make sure if you're going through those documents to make sure that those covenants are going to be viable for you down the road. Quite often in the legal documents, people sign documents without really understanding, what parameters the banks have put on the individual. So you want to review those. Make sure that if there's going to be distributions, the bank hasn't limited your distribution. Obviously, in a co-op, the profits need to be distributed out to the individual members, the individual employees, workers, so they can pay their taxes that would be incurred on that. Quite often there's limits from a bank's perspective on how much money can be distributed. So you just want to make sure that as you're going through those documents that it's viable for you. And if there's issues, you need to address them with the bank at that time and not get caught up in you're really putting yourself in a corner you can't work your way out of. Securing the assets, that goes with completing the financing, executing all the appropriate agreements. It's best to have all those things ironed out up front and try not to work on them going down the long term. And then once the documents are put together and executed, then you'll actually launch the business, if you will. Moving forward from that, you're going to implement the business plan that you have in place and adjust accordingly. The more thorough the business plan is, the more thought you're going to put into different scenarios that say, if business grows over time more rapidly than we anticipated, there's going to be different needs that you're going to have to consider, and you're going to have to, if the business doubles compared to what you thought it was going to be, obviously you're going to have some working capital constraints, so you want to build in some planning around that, contingency planning around that, but then adjust as appropriate. The transition of Select Machine was pretty interesting that they completed that just prior to the recession, and they really had to adjust their business plan where business was down less than 50%. And they had to adjust accordingly. And the great news is that they did adjust accordingly, and they had the flexibility within their planning process. So things don't always go according to Hoyle, as we like to say. And any planning that you do just puts you in a better position to adapt as necessary. One thing that I would note with the employee agreements, you want to get those prepared. The limited recourse notes. That's where you will actually have where the company loans money back to the members themselves to to buy the shares. There really is there's actually a note, so it is a loan, and it's expected to be paid back, but there's limited recourse. Now the reason for this is if you had somebody who had the they had the stock and they wanted to go sell outside of the cooperative. This gives the cooperative control that stock is sold back internally if it's not paid off, and as well, it binds. There's commitment bound to the member and the cooperative. The other side of that I like to look at from a perspective standpoint. If you were a business owner, and more so lately rather than maybe a couple years ago, when a business owner goes to a bank and gets a loan, there's recourse. Used to be when it was viable before I forget which regulations came into play. When you were loaning to a private business, we always talked about houses and spouses. You made sure if it was warranted, you would get the pledge of the house. There would be a specific mortgage taken on the house in support of the loan. There would be where you'd have the spouse guarantee, so the assets couldn't be sheltered within the spouse's name. Now the spouse name went away, But if warranted, a lot of these business owners have placed their mortgages on their homes to support their businesses. Now, pulling back to this limit recourse, as people are signing that, I know it's going to give them a little bit of a reason to question whether or not they want to do it. But they aren't being asked to pledge their houses. They're not being asked to have their spouse, sign on their behalf. So they're participating, but they're not participating as if they were 100% owners. So I like to throw that out there just from a standpoint so people can get the perspective that it isn't outside the realm of traditional lending to be asking for this type of thing. Then we look at, generally, if you're going to be successful, there's things you can do to be successful. If you don't do these things, you're not going to be successful, typically, unless the business is just so rapidly viable on its own. Really look at using advisors and committees effectively. Make sure as you're going through the process you get the advisors engaged. They're experts in the area that they're bringing. You may not have that internally, so make sure and rely on their information. And they aren't looking to unless you go out and get the wrong advisors. Really what they're looking for is the benefit of the cooperative. In committees, make sure the committee processes as you're going through, they understand what their charge is and they're working on that charge. You don't have the finance committee working on human resource items and vice versa unless they intersect. So just make sure that those roles are defined and the committee knows what's expected of them, and they'll have a better result. Keeping members involved and informed. Obviously, if they don't know what's going on, they're not going to commit to it as readily. So you want to make sure there's a good flow of information. Good communication is critical. Once you have the company up and going, you're going to have, between the membership, the board, the manager, and the employees. You've got a circular relationship there because the manager and the board and the employees are all the same folks to a degree. So you just want to make sure that there's good relations between there. You don't have where it's a you build into management and the workers, and you get in a confrontational mode. That's not going to help the organization. So you want to just maintain that. Conduct business-like meetings. There can be a lot of issues that can go around. Make sure that it's business. It's really business centric, because if you don't focus on that, you get into personal situations. It's not going to be helpful. It's going to be detrimental to the organization. As any business should follow sound business practices. There's always an underlying business, even though it is worker-owned, worker-operated. It's always an underlying business that you have to focus on and make sure you're following the practices that are appropriate for your circumstances. And the last is really to forge link with other cooperatives and work with other cooperatives where possible, because cooperatives cooperate. So a lot of these are really mixed. They're good common sense items for any cooperative, but for the worker co-ops, especially from a startup standpoint, there's just much more potential for success if they follow these guidelines. And that sort of ends it. I know it's sort of an overview. Just try to give you some understanding of the process. Although I know we have a lot of people out in the congregation. We're preaching to the congregation here. So, but we would, we just think there's a process that needs to be followed. It's not going to be the same process for every organization, but a lot of the detail is in process, and that'll help get you through and successfully launch a business. So I'll open it up from there. Jay?
Any questions? No questions? Well,
I see one popped up.
Yeah, Peggy has one.
Peggy has one about employees who buy out an existing company. We had that webinar. Peggy, we did have some issues with our website. Unfortunately, our provider got hacked into, but I think everything is sound. Is that the case,
Yeah, we should be back up.
Going. And last week's webinar is recorded, so if it's not on our website, we'll make sure, and I'll send you the link through ReadyTalk to get that for you.
Yeah, it will be up. If it's not up today, it'll be up shortly. Yes. Any other questions?
Any other questions or comments?
Well, please don't hesitate to contact Roy if you have any questions. His contact information is on the screen. And from time to time, we'll be offering other events sponsored by the OEOC, and there will be more webinars at this point. I don't think there are any co-op-related webinars that are actually scheduled at this time, Roy, right?
There are not. We are working on one that's really the successful cooperative models. And I think one of the things, the format of a webinar, we don't get in a lot of detail, but I think in the future we're thinking about drilling down on some of these points and getting more examples for people. This is basically intended to provide a general overview. So if you think that's helpful and you'd want to have some more feedback on that, let us know. As people indicate, particular areas that they have interest, it behooves us to move forward with that. A couple more questions. How do co-ops plan for cashing out on departing members? Really, it varies from group depending on the amount of cash that they have to lay out. Typically, it's going to be based on the capability. It may be where, if the co-op has a lot of cash, a lot of flexibility, that's going to come, fairly quick when they leave. Otherwise, it may be a period of time. They determine that they can't refund that money or rotate the money in short order, so they may start 5 years out and rotate it over a period of time. Again, that's just going to be based on the circumstances of the co-op itself.
Great questions. Good feedback, good interaction. I think with that we'll probably end this session, and again, urge you to give us feedback on this session and any future sessions you'd like to see. We'd like to keep improving them as we go. So at this point, I will end the webinar and say goodbye. Roy?
Thank you.
Thanks.
Thank you.
Thank you. Please stand by.